Right, hi all. This is quick test 3. So let's go through this. We carry on our discussion about budgeting and some more theoretical aspects that you can read up on when you look at the session notes. Right, so we jump here straight into this question of what incremental budgeting is. So from the theory of budgeting, this is just really how we prepare budgets, or how budgets are prepared. If you remember, we discussed a number of types, and I think I do have. I think in class, I actually, if you remember what I did, please watch that session. It'd be between session 5 and session 6. I use examples from the exam kit or the question bank to tackle the different types or styles of preparing budgets. This talks about incremental budgeting, this first question. So this question of incremental budgeting is where we year on year prepare our new budgets based on what's on the figures we have from our previous years. So if you like, it's like we have a certain standard somewhere, and year on year we just adjust. We don't quite start from scratch. We base our figures on what we know. So typically incremental budgets are used in stable environments where things aren't changing very much, and we have long-term contracts, and we can almost trust the standard, to be fair, and we can almost be sure we're quite happy with the original standard, so that year on year we're only just really adjusting for growth, for savings, for inflation, if you like, to make sure we're keeping up speed so that our budget is still relevant and current, if you like, to make sure. And that's all we're really doing. Again, I've highlighted that an organization doesn't have to use incremental budgeting across all its balances. So you can, whatever, the income statement is always a good idea. I've always said that the income statement is when we talk about sales and cost of sales and all the different expenses, all you're really doing in effect is looking at budget areas or control centers and looking at their budget. So some centers might actually be using a different type of budget, but in general, it would be the nature of the product that would drive the type of budgeting. Right? Okay, great. So let's look at this. So incremental budgeting, ultimately, like I said here, this question is about not true. So it says the current year budget is taken as the basis. So typically that is true. That is the case. It's the basis, so this is true. In setting budgets, using the accountants will roll forward the base, amend by adding or removing growth, savings, adjusting for inflation, and that is true as well. That's kind of the principle there. Let's look at number 4. Incremental budgeting can stifle innovation. So again, in ways the service can be improved and made more efficient. So you can see, because you're using an old standard year on year, it is likely that padding and inflation can already exist within the original budget, and you won't be able to know unless you broke down the budget and asked why we budget for certain things. So this is true. It can. It doesn't mean it does, but it just means you have to have very good standards that are regularly monitored. And typically when you're in the public sector as well, it's very difficult, because when we talk about standards, we need a market to compare something to. So, and also in the service sector, it's very difficult, depending on what the product is. So imagine looking after people or the National Health Service. It's very difficult. Anyway, the incremental system is rarely used in the public sector, as it's too simplistic and focuses only on, and this is just not true. I mean, it's usually used in the public sector. It isn't simplistic. I mean, it's simple from the point of view of, we know a starting point, but we wouldn't say it's too simplistic. That's a bit extreme. So the answer here is C. Okay, great. Let's look at question 2. It says, which budgets are continuously being updated in relation to new information? So the whole idea is you'd start your budget, say, in January. Come March, you would stop and compare the budget to what's actually happened. So you have your budget, 3-month budget, compare what's happened in the first 3 months, readjust and start again, and whatever, get to June, get to the end of April, May, June, get to the end of June, ask the questions again. So you kind of you can see here, it's a constantly updated budget. There's no such thing as that. I mean, that's the action. Incremental budgets are what we're talking about. The initial, this is different, planning, program, budgeting systems. We talked about that in class. And that's not what's going on here, but what we have here is what's referred to simply as a rolling budget, ultimately, a rolling budget. So there's a good question bank question on this planning, programming, and budgeting. It's very almost kind of clear typically almost semi-project based, but the focus here is really on rolling budgets. That's what we refer to, budgets where we're looking at new information as we go along and adapting. Okay, great stuff. That's 1 and 2.